Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC. Its weekly commentary is the basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 was up 1.5%. Most of that gain happened on Friday. And we can see the Canadian stock market was up 1%. The big news last week was the Jackson Hole Economic Symposium. In that symposium, Powell made a speech to the media, and he said that the Federal Reserve could start tapering its assets purchases later this year. He did not say that they would. Investors took that could comment to be very dovish and push the market higher. He also said that the Federal Reserve is not considering raising its federal funds rate at this time, which is also another dovish comment as well, helping to push the market higher on Friday. Last week, we did see HAC not make any substantial changes in its portfolio. And if we take a look at some of the sectors in the marketplace here, let's start by taking a look at the S&P 500 action. We can see here on Monday it was positive, Tuesday positive, Wednesday positive, and then on Thursday we did see the S&P 500 pull back down as investors were a little skittish before the Jackson Hole Economic Symposium. And on Friday we saw this positive action for the S&P 500 as Powell came out with his dovish comments overall. If we take a look at the different sectors of the marketplace, last week, we can see here, let's start by taking a look at the reference for the S&P 500 at 1.5%. If we take a look at the growth sectors of the market, all positive last week. The consumer discretionary sector, positive and outperformed. Communication services, positive and outperformed. Technology, positive and slightly underperformed the S&P 500. If we take a look at the cyclical sectors, they were all positive last week and outperformed the S&P 500. Here we can see that it was the industrials, the materials, energy sector, and also the financials as well, performing quite well. What's interesting to note is last week we saw a change here. Recently, we've seen the defensive sectors performing quite well and outperforming the S&P 500 as a group. And last week, we saw all of the defensive sectors, real estate, consumer staples, healthcare, and utilities, all negative and underperforming the S&P 500. This was largely due to a shift to risk on, particularly once Powell made his dovish comments. If we take a look at some of the selected subsectors in the marketplace here, we can see biotech actually was up 2.8% last week. Recently, biotech's been a little bit volatile. It's been showing some signs of underperforming the S&P 500, but last week we did see a positive development for the biotech sector. Look at some of the cyclical sectors, the steel sector, the metals and mining. Metals and mining up 7.7%. Silver was up 4.6%. Gold at 2.1%. As well, agriculture 2.7%, home builders 3.2%, the semiconductor sector up 5.7%, transportation basically 2%, and the retail sector up 2% as well. So overall, we did see some of the cyclical sectors perform quite well. If we take a look at what we should expect perhaps coming up into the next week, from a seasonal basis, the S&P 500 tends to be weak at this time of the year. September is one of the weaker months of the year on average over the long term. Now, we did see some bullish or dovish comments from the Federal Reserve on Friday, helping to support the market. We saw the cyclical sectors perform quite well. Now, we haven't seen the cyclical sectors actually perform well over the last few months, except for on a sporadic basis. What we need to see for the market to sustain a rally here is probably we need to see the cyclical sectors continue to outperform the market here. Now, the one thing we should note is on a seasonal basis, as a group, the cyclical sectors tend to underperform the S&P 500 in the month of September. So it's going to be interesting to watch. Thank you very much.